So there's a perception that it's difficult to get into rental properties. People will say, I'm not a millionaire, I can't get into rental properties, but nothing could be further than the truth from that, because it really doesn't have to be hard. So what I want to do is talk about some of my favorite ways to get into rental properties. Now, probably what you're saying is, Ryan, I'm not a millionaire, how am I going to buy a rental property? Well, the first rental property you can buy is an owner-occupied property. You can buy the property, you can live there, you can fix it up, and then you can rent it. The other cool thing with that is if you've owned it for 3 out of 5 years, you've lived in the property, so you could rent it up to 2 years, and you sell it, any gains you make from that are tax-free. There's 0 taxes on that. So that's something to consider as well. But with any of these properties, you can get a Fannie Mae or a Freddie Mac loan. Typically, Fannie and Freddie will let you go up to 10 loans per person. So what we did is my wife got 10 loans and I got 10 loans. We both had to have income to support that, but the rents we were getting helped offset the income that we were making in order for us to qualify for that. So you're gonna have to have decent credit and you're gonna have to have some income to qualify, but it's not gonna have to be crazy amounts of income. You just have enough that your debt to income ratio is there. And then what happens is every year you're focused on getting enough money to put a down payment on one of these properties. Now, can you do a down payment of 10%, 5%? Yes. 20% is ideal because you're not going to have to pay any mortgage insurance, which is a big savings to you, but I wouldn't not buy because of that. If I can still cash flow the property or even break even on the property, depending upon the market that I'm in, knowing that values are gonna go up, knowing that I can do cost segregation and save myself on taxes, those are things that I wanna take into consideration as well. So if I could earn enough money that I could put 20% down on a house every single year, that would be great. Now, if I can't do that, maybe I do 10% down on a house every year. If I can't do that, maybe I buy a house every other year and I put 10% down or 20% down. But I'm basically saying is at the end of the day is if you had 10 free and clear properties, you would be raking in the dough. Let's say the average rental price brings in $2,000. So that would be times 10, $20,000 a month or $240,000 a year. Yes, there are some expenses that you're gonna have to take care of, like fixing roofs and those types of things, but you're probably gonna be down to $190,000, $175,000 after all those expenses are paid, just by owning 10 properties. One of the other things that people just do not think about in acquiring properties is a concept called BRRR. Okay, this is one of my favorite concepts. The concept with BRRR is to buy a property, so BRRR, BRRR, okay? So you buy, then you rehab, and then you rent with your lender's approval, and then you refinance. So the idea is if I can buy a property for $100,000 and it needs $50,000 in rehab, so I'm into it $150,000, okay? So if I can do that and I can get a hard money loan, and my hard money lender will allow me to rent, and typically they're gonna say, well, all the rent has to go to pay down the loan, which makes a lot of sense. But if you can do that, then the idea is hopefully you've improved the value of the property, and if that property is worth about 20% more, 150 times 0.20, so let's say it's worth let's just call it 185 because of the improvements of the property, times 0.80, that's 148. So basically you get a loan on this property for $148,000. You'd have an asset that's worth $185,000. You would pay off the lender, your hard money lender, and you would go into what's called a rate and term refinance. So going from like a 15% interest rate to a 5 to 6% interest rate. And the idea with this is you're getting into a property with little to no money down. That's the whole concept here. You're using a hard money lender to acquire the property. You're using a hard money lender to put the repairs on the property. You then are increasing the value of that property. You are then renting that property, and that is going to offset some of the expenses for that property. That money will go to the hard money lender to help pay down that debt, and you do what's called a rate and term refinance. Instead of doing a 6-month loan, you go to a 30-year loan, and instead of a 15% rate or a 12% rate or 18% rate, you're going down to a 5 or 6% rate, and then you're in a long-term financing situation. Now, with this, I can tell you, don't do adjustable rates. Just don't do adjustable rates. You want fixed rates, period. You want fixed for 30 years. That's where you want to be going because you don't want to deal with the rates going up and going down and having that affect your cash flow. You want to lock something in. The other cool thing about locking something in is if rates do go down, then you can do a refinance and you can get that lower rate if they go down. But if it goes up, you're not gonna have to deal with that going up because your rate is actually locked in, okay? So these are really good ways to get into finding rental properties and how you can finance them. You do not have to be a millionaire to get into rental properties, but I can tell you if you do it right, it can help you become a millionaire. Now, I put together a video that goes through the first steps of getting into real estate investing, okay? This is like step by step. It's called How I Repeatedly Find Motivated Sellers for Fix and Flips. You can also use this for BRRRR deals as well. So it's gonna go through the first steps of getting into real estate investing. If you can't find sellers, you're really not a true investor, and some ways that you can find motivated sellers. And I'm gonna show you how I target the right property with the right owners over and over again in this video. You're gonna wanna check it out. Make it a profitable day, and I'll see you next time.